Hi, everyone. Good morning. I'm Luke Wilcox, the founder of Ethos. Thanks for joining this morning to talk about impact as an investor or consumer. Um, so let's jump in. Just a little about me. I'm the founder of Ethos, which is a fintech platform that helps consumers and investors align your spending with the causes you care about. Prior to this, I have a background in nonprofits here in Minneapolis, as well as doing some consulting for big corporations. I'm not a financial advisor, so please don't take any of this as investment advice this morning. We are going to talk about a few things related to impact investing and consuming this morning. First, what is impact investing? You may have heard about it. We'll talk a little bit about how to define that. Then we'll talk about how you can make an impact in this time during the pandemic with all the racial injustice, with a whole variety of causes. We'll talk about how you can make an impact through your investment and purchase decisions. So just jumping right into impact investing. First, what is the problem or problems? There are many that impact investing and consuming attempts to address. So some of these include things like climate change, gender equality, racial injustice, poverty, education, a whole variety of things that impact investing attempts to address through your decisions of what you invest in and how you purchase or what you purchase. You might recognize a bunch of these from the UN Sustainable Development Goals. This is a framework that a lot of investors use to organize their impact and how they think about making an impact. So if you've been wondering how you can make an impact during the pandemic and over this last year, you're definitely not alone. This is a growing trend, especially among younger investors. Millennials, 95% are interested in sustainable investing. That holds true for older generations as well. Not quite that percentage, but definitely a large trend. On the other hand, a lot of people don't know how to do this. It's a difficult thing to know which investments or which corporations are aligned with your values. There are a lot of resources out there, but it can be time consuming and difficult to easily find the right information or accurate information. So first, what is impact investing? Impact investing, one way to define it anyways, is investing with the intention to generate a positive, measurable social and environmental impact alongside a financial return. So it's different from donating to a charity or just investing purely for the traditional goal of financial return. They can be, you can invest in developed markets in the US or other developed markets or emerging markets. And you can target a range of different asset classes with an investment, from public equities like ETFs and stocks to private equity to other types of assets. And impact investing, it seeks to attain a similar financial return as non-impact investing or non-sustainable investing. This is the market rate investments you see on the right-hand side here are investments that seek to attain the similar return as non-impact investments. So another way to think about this, there are a whole bunch of terms out there related to impact investing. From ESG, or environmental, social, and governance investing on the left-hand side here. This is usually used to refer to investing with specific criteria about a corporation's environmental or social or governance practices. And this is usually used with the intent to mitigate risk and still use these criteria to filter out companies that have poor behavior on these ESG criteria. The middle bucket, socially responsible or sustainable investing, this it takes a little bit more active approach on filtering out negative companies on things like tobacco or weapons, as well as actively choosing investments based on specific ethical guidelines. So if you want to invest in clean energy companies, for example. On the right-hand side, the most direct impact investment methodology is investing in a specific project or outcome or goal with the intent to do something positive. So you might invest in a affordable housing cooperative or a specific loan that was targeted towards benefiting the community. It's the most direct and typically will involve smaller organizations or community organizations. So this has grown very rapidly over the last several decades. But in 2012, there was about 13 trillion globally invested in sustainable investing. By 2018, that's grown to about 30 trillion. And this is a broad definition of what sustainable investing is across those three criteria: ESG, responsible, and impact. In the US, 12 trillion, that's about $1 out of every $4 invested is in some way categorized as a sustainable investment. And a lot of people will think that if you are investing sustainably, does this mean trading off your financial returns? So not necessarily. The vast majority of research has shown that sustainable investments do not perform any worse than traditional investments. So this is a meta study from 2015 that looked at about 2,000 studies examining the relationship between ESG criteria and corporate financial performance. And 90% said that there's no negative correlation. Most had a positive correlation. So if you invest in companies with positive impact, that's positively correlated with corporate financial performance or returns. So that was a very brief overview. Let's look at a few ways to have an impact, that you can have an impact. One, the first way is your 401k or your employee retirement plan. So if you have a 401k or other retirement account, do you know what you're invested in? Do you know the funds or the companies that are held through those funds? Well, it turns out that 2.9% of 401k plans have at least one fund dedicated to ESG, environmental social governance criteria, though not many. So it's very likely that your 401k is invested in things like tobacco, companies that cut down the rainforest, maybe don't have as good of an impact on society as you would like. So that's very likely, and most 401k plans do not sort of transparently show you what's in them. So one quick example, SPY is an ETF that's commonly held both in 401ks and by individual investors. So this holds 505 well-diversified stocks across the S&P 500. When you buy this, you get, so this 500 stocks you're holding with your dollars. And out of those 500 plus stocks, you have a couple of tobacco companies, some weapons companies, oil companies, a bunch of companies that have received customer product fines, environmental fines, and worker-related fines. So there's a whole host of ESG or impact criteria that are not going into a fund like this, and that you're holding, you're tacitly endorsing and also supporting through your dollars. So how can you influence what's in your 401k? It's may or may not be possible, and may or may not be easy to do. Someone at your employer likely picks or approves the lineup of funds for your 401k. You can ask a human resources person or the CEO or leader if you're a smaller organization. Ask if you can see details about what's in that retirement plan. Some 401k providers will show you upon request. Consider starting with small with a single request, such as adding a socially responsible fund focused on large American companies. These are, so there's a whole gradation of types of socially responsible funds. Some are larger and focus on American funds, for example, or American companies, for example, that filter out fossil fuel companies or tobacco companies. If you can start with a simpler fund like that, that may be easier and still maintain a very diversified 401k. You could also consider a brokerage window, which is it's an option for employees to self-select or to pick specific funds or assets as part of their 401k. So your provider may or may not offer that. And then if you have a sustainability committee or a person, you can talk with that person or that committee about your 401k, and the funds may not be consistent with other values or other activities at your firm. So moving from 401k to funds and financial advisors. So if you're doing your own investing with an online broker with Fidelity or Vanguard or Robinhood or whoever, some mainstream funds, there are a lot out there. These are just a few examples. One is Vanguard has several ESG funds. One example is the Social Index Fund that tracks this this FTSE for Good US Select Index, which is a negative criteria. It filters out some poor performing or poor ESG companies like fossil fuels or weapons arms companies. And it's still very diversified. The second option would be this Global Impact Fund from iShares. This invests in companies that derive at least 50% of their revenue from the Sustainable Development Goals, or companies that support the Sustainable Development Goals. It's a little bit more active with picking companies that are positively working towards or have some of their revenue dedicated towards supporting the Sustainable Development Goals. And then there are several portfolio management services or online brokerages like Earthfolio or Betterment that offer sustainable funds and help you manage your investments in these funds. That's another route to go. So if you want to do your own research, which I would recommend, even if you invest in an ESG fund, it's still helpful to do your own research to see what's in that ESG fund. There is a fair amount of greenwashing, funds rebranding as ESG funds. So it is good to do a little bit of research on what's actually in a fund before you invest in it. So fossil-free funds is one example. It lets you filter out which funds are fossil-free, don't have fossil companies in them. Gender equality funds, a similar filtering tool lets you see which funds perform well on gender equality. Gun-free funds, another example. And then there are several other fund filtering tools that As You Sow is the organization behind this tool. This helps you have a little bit more transparent picture into what's actually in an investment before you make it. So the more direct impact investing, there are also a bunch of resources available to you if you want to invest in more of your local community or do more direct impact investing. A few examples: Calvert Impact Capital, you can do as little as $20. You can invest in one of their funds that channels capital to community development initiatives such as affordable housing or environmental protection. Impact Finance Center provides a bunch of resources to help you get started as an impact investor. It helps you find specific funds as well as a lot of educational tools about what does it mean to be an impact investor or to do impact investing. A lot of great resources. Impact Assets has a bunch of options. They have one for $5,000 minimum investment that's focused on a variety of community-based outcomes. But they also have a database of different impact investment funds that you can consider investing in. And then here in the Twin Cities, Sunrise Banks, their Impact Deposit Fund uses funds to provide loans to local community efforts, such as affordable housing or community services. So they're a good one to check out. And if you're looking for a bank that is local and invests in the local community, Sunrise Banks is a good one. Just as a disclaimer, too, I'm not affiliated with any of these organizations. So working with a financial advisor, there's also a bunch of financial advisors offer or are focused on impact investments or sustainable investments. A few examples in the Twin Cities that, if you're interested, Greater Good Financial is one. They offer sustainable investments and also donate a percentage of their profits to nonprofits. Alpha's Future is a woman-owned Twin Cities-based asset manager, and they focus on sustainability with their investments. And then Becoming Financial is another one. So it's whether or not you look at a financial advisor who's specifically focused on impact investing or not. Most advisors that you work with will at least have some ESG options or should be able to help you understand a little bit about the impact of your investments and choose some funds that are a little bit better aligned with your values. So lastly, looking at stocks and purchases. There's an example. There's a lot of information out there about specific stocks and specific companies. If you want to avoid buying from companies that have a negative impact on things like gender equality or racial injustice, there's a lot of information out there. You can just Google a lot of stuff or search for a lot of stuff. But it's also it can be very conflicting information. So one example with Google, some things that Google is great at, they source a lot of their electricity from green power, more than 100% of their US electricity. They have an A rating on their impact on climate change. They're committed to gender equality. They've been rated well for their diversity practices. So a lot of good stuff about Google, about their organization and how they choose to run themselves, but also some not so great stuff about them. Some public controversies, anti-competitive behavior practices. Their CEO has been rated very overpaid, so not the greatest maybe for wage equality. They've been rated poorly for some human rights performance, especially in their supply chain. They've been linked to some forced labor. So a lot of this is all publicly available information you can find on any large company. And it's hard to sort of evaluate Google as a whole. What is their impact? So it sometimes is better to pick the causes that you care the most about. Say you really care about climate change. You can easily find information about which companies are better for climate change or better for any specific cause. But any large corporation is going to be mixed in terms of its impact. So your purchase decisions and your investment decisions are, there's no perfect way to invest wholly for the causes you care about. There will always be mixed impact. But you can do some research and find better companies anyways. It's a relative calculation. So there are a lot of sources out there that can help you do a little bit of research, and before you make your next big purchase of a car or the next software product you use or the next big purchase, whatever that is, you just do a little bit of research on a few different options, on the corporations you're thinking about, on the brands you're thinking about. There's a lot of resources out there to research companies or stocks. So a few of them, there's a lot on this page, but a few that I would highlight. Corporations can choose to be certified B corporations, which they go through a fairly rigorous process to show that they are conducting themselves ethically internally, their hiring practices, through their supply chain partners, through their impact on their local community. So brands and companies can choose to become certified B corporations. They have a database of companies you can look up which companies are certified B corporations. So example would be Ben & Jerry's or Seventh Generation. A lot of random brands take the time to change their behavior and behave more ethically. A few others, so Human Rights Campaign has some good information about about companies' behavior on supporting gay rights, for example. Or Just Capital has a lot of good information about which companies are most ethical for a variety of economic outcomes. So there's a whole bunch of information if you just Google and use several of these organizations. So I will stop there a little bit early and see if there are any questions. I appreciate you appreciate the time this morning, and let's see if there are any questions, but thank you very much. Let's see. And so if there aren't any questions, please reach out to me if you do have any follow-up questions. Check out the startup that I mentioned that I work on is ethos.so, but please reach out to me at luke@ethos.so if you have any questions or would like any help with aligning your investments with your values.